rate decision, and it's about to happen. It's about to go down at 7:45. We have about 5 minutes. I didn't let technical problems stop me this time. We went ahead and restarted, but I hope you guys are doing well here. This is a fabulous Thursday, the 22nd of July, and it's so good to be with you here today. And so we're going to use the pip and run system to take a look at the ECB rate decision and see if we can find an opportunity to trade the announcement. Okay, so with further ado, let's go ahead and get on board. Hello and howdy. Hopefully I'm going to do a sound check, video check. If you can see my face and hear my voice, can you go ahead and type something in the forex group? And our group, I'm broadcasting to all points. We got big people from our Twitter channel, people from our we got people from the YouTube, also from the Facebook page, but we also have our Facebook group, and our Facebook group is the forexcashmachine.com. So you can come over here, Forex Cash Machine, to become a member there. If you have to become a member, and you can interact with me live during this announcement, which is going to go down in like very soon. Okay, so let's go ahead and get right to it. Again, welcome to Elite Traders University, and then we're going to look at the risk disclaimer on our screen. Make sure you understand all the risks associated with foreign exchange trading. And a little bit about myself. My name is Greg McLeod, and I'm a 25-year trading veteran, former Wall Street insider. I traded everything from stocks, commodities, forex, and crypto, and I'm one of the foremost authorities of short-term day trading and scalping. And again, I'm a founder and CEO of the Elite Traders University, and you can apply to the Elite Traders University at elitetradersuniversity.com/apply. Okay, so let's get to the charts. The announcement is going down real soon, and I'll be further ado. We're gonna go, Greg, go. Okay, we're gonna look at the My Market heat map and the arrangement of currency pairs by percentage change, and we are going to take a look at our announcement that we can find in the economic calendar. We're going to go there, and then we're going to look at high impact items in our economic calendar, and we're going to look for today. Okay, we're going to scroll up, and we can see that we have that coming up in just 2 minutes, a minute. But there are a lot of things going on here in we can look at our all instrument forex heat map and see what's hot. And we see Aussie is in the top spot. Aussie Swiss, Aussie dollar, Aussie yen, and Aussie Kiwi all up a little over a third of a percent. So pretty good moves right there. But what we're gonna be looking at is the euro. The euro is our hero, and look, it is 743. We're getting a breakout now at the 117.96. Here's our I have a split screen display. I have the euro 1 hour on one side, and I have the euro like 1 minute over here. And so I'm gonna draw. What I'm gonna do is draw like a trend line here, and we can actually see. Now I'm looking at the euro, but I'm sure you probably look at some other euro pairs too. But 744. We have 1 minute, about 24 seconds to count down before the move. And basically, we've got a nice formation here. We had a Fibonacci impulse move here, right? And probably lower our position size. We probably don't want to go that big. Okay. Yeah, probably a little bit more than that. Okay, here we go. All right. Oh. And so we got our trend line there at one spot 745, and we got to move, and we're going to get long. And let's see, is this a fake move to the south side? Shrinking violet. Now, with C-Trader, we have a feature called the switch direction. And this is a big long wick here on the I mean, look at that. Look at this Darth Maul candle. Just we went both ways, up and down. And so we're going to look here, and we're going to switch. Let's see how that works out. I mean, pretty wicked on both sides of this announcement. We went long and short. Push up to the north side. We may still get a fake move to the top side there. The announcement, they kept rates unchanged at 0.0%. And wicked Darth Maul candle bouncing off of the 1.1790 area. Could be another fake move because this is still kind of an uptrend. So we'll watch it. Okay, I'm closing all, switching long. And I'm going to spread these positions to the north side. Let's see. Okay. Now we should see a breakout. If we do break out, we have a Fibonacci expansion target, and we have targets. Oh. $1.27, the 1.618. Okay, so we got our shake and bake already happened. So let's see if we can spread these targets out. Big bullish engulfing candle. Expansion target 118.32. We're at 1.1809. So you can see the market maker stuff right there. But if you remember my analysis from last night, I kind of said that, yeah, they'll probably, south side break, move to the north side, but it's north. The move is north. The move south was a fake, and so now we're at 1.1812. Our first Fibonacci target is hit at 1.1812. Next Fib targets come in at 1.1832, and let's see if we can hit some of those. I'm gonna take one of those out. There's a one. Now, usually these central bank announcements are good for anywhere between 40 and 50 pips. So I haven't let anything really totally run yet. We have an old high back here at 1.1875. We can probably spread out some of these targets, get a little bit more group there, but there's $1,000 there. I'm probably gonna take that. Okay, and so we hit the 1.618. There are lots of targets up here from Fib expansion where we had this big down move, a push up, and a pull back. You probably can't see that, but okay, we're pulling back. But usually we get maybe a pullback. We went from low to high, so here's we have a new high, a new low, a new high. We put a fib on it. Anytime we have an established low, an established high, we want to connect that low and that high, right? And so we have the 23% retracement at 1.1807. We're at 05. The 38% retracement is 1.1802. And we have the 50% retracement at 1.7799. And what we're looking for is a bounce at one of these key areas. And once we have a bounce at the key area, what we want to look for, is a that bounce, and then the extension, right? The trend line break, right? So we draw a trend line across the top of that. Let's see if we get a bounce at one of these zones and a break above this line. I'm going to make this line red. Okay. And once we find the bounce, then we can put an extension on it. So high and low, put a retracement, find the bounce, draw your trend line, and then draw your extension, right? So we got a break, but that doesn't really look like that's a 38% retracement. And then we connect either to this one, or wherever the bounce happens, that's where we draw our line. So we may drop to the 50% retracement. And the key is not to panic. If we're completely on the wrong side of the tracks here, is if we break that low. If we break this low that was put in at 1.1785, that's a 100% retracement of this whole move, and that would be like disaster, right? So that was like our kill point. So here's our bounce. We bounced at the 50% retracement. See the wick. Now we want to see a breakout candle above. We want that low to hold. And if this low holds, our Fibonacci expansion can connect there, right? And like I say, it could work down to the moving average of 61% retracement, 1.1796. Now the ECB, they're doing, after they do the rate announcement, they're gonna have their statement, so they're answering questions from the media. So a lot of this movement is like positioning on, the after, the actual statement that's going out. I'm not listening to the statement or listening to the chatter, because the price, all the activity will be in the price itself. Anything I need to know is in the price itself. So again, we retag the 50% retracement, 1.1799 about. Now I might not have this. If I have it exactly correct, then it's the right spot, right? We'll break down the 50% retracement. That's not holding. Here we go, green eggs and ham. How about the 618? $618 is tanking pretty hard, and the 786 is the Fibonacci of last resort. And if it does get to the 786 and bounce, then I would not look for profit targets above the 18. Maybe the 100% expansion would be the top, but I would probably close everything out at the 1812. And then we are really moseying on down. This big candle was not expected there. We're looking for some type of continuation, and the 786 is coming under challenge, 1.1790. The 786. Now, usually we get retracements at the 38 and the 50 and the 618. When we start getting down to the 786, then it starts ringing warning signs. right? I mean, there's one really last Fibonacci of last resort down here at the 88.6, right? And we may, but if you look at the higher time frame, we are still the 50% retracement on this move comes at 1.1778, and that's a really deep credit. We're basically retested the entire move. Here's the 88.6%. That's like the last Fibonacci of last resort for this move. And now we're at the nearing the 100% move, which could be a double bottom, and it's pretty huge retrace. Okay, here's that. So here is our 88.6% Fibo, but let me snap this on this. So the loops or the second chance trade, which I talked about in the video, is okay. We had the big move up, we pulled back, and let's say you just woke up and saw, oh wow, okay, lots of red on the 1 minute chart, and so we will want to see a bounce and a break. And if there's no break, then we just set aside it. And now we're at the 100% expansion of, so basically retrace the entire move of the which is quite bearish if we're sitting at the 100%. This long wick here was a big sell order that got retraced back very sharply earlier, and so there are buyers that stepped in here. And let's see on the 1 hour chart, and I mean we took probably equally amounts of longs and shorts, and were stopped out. So let's see. But we are finding that bottom retracing this whole wick, but yeah, we need that trend line to break for us to be pretty. Right now, a lot of doubt about this move, because we broke out to first fib level, the 61% retracement of this expansion, 1.1812, and we got there exactly, and then turned around on the same candle. But you can see that we have basically 3 long wicks, one here, and one here. There's 3 wicks, and what a wick is when price actually was very bearish, and then buyers stepped in. It was a full body rectangle candle, and then buyers stepped in and pushed it up, and they left the wick behind. So a long wick down is very bullish, and we see not 1, not 2, but 3 of these long wicks, and I can probably highlight that a little bit better by doing that. Okay, so you can see now. However, I say, look, Greg, there's a tall wick there. It's like, yeah, there's a tall wick, and that's bearish too, right? And this is what we call a dragonfly doji. So we have a long wick up and a long wick down. So it's equally as bearish, probably more bearish because it's taller. The line is taller, right? But we have something called, we have higher lows. We have a low, higher low. This low is higher than the previous low. This higher low is higher than the previous low, and this low is higher than that one. So we do have rising higher lows. But on the other hand, the bears are saying, yeah, Greg, but you have lower highs, which is bearish. It's like, yes, bear, yes. So if you have lower highs and higher lows, you have a triangle, right? And so when you have a triangle, the bulls and bears are equally matched. And so what you're looking for is the breakout to resolve the battle between the epic battle between the bulls and the bears are hitting it out. they're duking it out, and we can see the battle at the 100% expansion was real. The battle was real. The trend line was broken. We have it's a bullish engulfing. It's big, but we want to see follow through. There was no follow through. We have 2 red candles there, so we're looking for some follow through. And we came up on this moving average and just got stopped. It was looking good though. It looked like we were having a kind of a rounded bottom right there. Taking a little bit longer than I expected, and it's like, okay, this is we have the higher lows in our favor on the higher time frame. This is a 1 hour chart. I'm using a two time frame display, or a dual screen, like those two blade razors. There used to be these razors that were like we came out with, it used to be a single blade, right? The single blade, and they came out with the 2 blades. Well, this is a 2 blade system. First blade is the 1 hour. The 1 hour gets you the direction that you want to go in, and then we use a lower time from like a 1 minute or 5 minute to actually give us the. Let me get rid of this. This is kind of to give you a directional bias. So this is a directional bias, and this is your trigger. And so we had, this would have been our first trigger was here, and we're looking for some follow through. Did not get it. Really fizzled out. And then we haven't broken this rising trend line here. We may get a test because this is where we are. This is a 1 minute chart, and this is a 1 hour chart. This is where we are in relation to that 1 minute or 1 hour chart. And we're coming down to the 38% retracement here of this bigger group. And now we're tagging the 38% retracement. And we're hitting that line perfectly right there. And we're pushing through hard. I don't know what Christine Lagarde is saying over there at the ECB press conference, but it is not good. And we broke down to the 50% retracement, and we broke the low. So let's say this is a fishing expedition. We broke the trend line. Let's see if this is just some type of fake move. 618 is right here of the 1 hour, the hourly 618, 1.17718. And this news announcement is, the Australian ones seem to be a lot better, guys. The Australian Man's announcement was extremely smooth. The New York ones seem to be, I don't know, not so. They don't have the same kind of oomph where you get the follow through. Retail sales, we saw when I trade retail sales, New York style, New York session, and that retail sales, usually we get about 80 pips out of retail sales, and it was a bust. It didn't do anything. It just chopped around, and we sat there for about a couple of hours, right? And then we did another announcement, and it was another it was Bank of Canada, but still during New York session. And that was kind of a bust too. But the ones that we've had the most success with have been with the Australian ones. And you wouldn't think, Australian, the New Zealand rate announcement was very good as well. Don't know if it's more liquidity during the summertime, but the New York session ones have been choppy at best, where they go in opposite. There's not this continual breakout. So, and this would be if I'm having this type of difficulty, the average the average trader is probably definitely, unless you're like watching me now and say, okay, Greg is now long, I'm going to get short. If you're doing that, that's cool and that's fine and good. Okay, if you're fading me right now, fantastic. But based on the rules of entry, breakout to the top side, you can see we used to have a strategy back in the old days on the desk called the straddle, and the straddle really was you had consolidation, right? You have this rectangle. I'll show you. I can pull up a little whiteboard. So the price would go up and then go into a little thing like that before news, right? And so you would put your buy order above, make it green, and then you put your sell order below. I'm going to put an arrow up, right? So we buy the breakout above, and then you have, I don't want that. Yeah, and then you have the sell orders below, and I want to make that green. I don't know why that happened. Okay, right. So, and then what happened was that you had your order. This is your buy. We have a buy stop. Buy stop. And then we have a sell stop below, right? You have your sell stop. Okay, seal stop. Sell stop, right? And then you would wait till the announcement. The announcement would happen, right about here or so, and then price would just kind of like mosey on here, and then go up, and then trigger your buy stop, and then swing back down, trigger your sell stop, right? So you have a bear trap, a bull trap here, a bear trap there, and then it comes right back in the middle, right? And now you've got two losing trades on both sides, right? This was called the straddle. Now, straddle seemed like they would work during Asia, because once it breaks out, I mean, like on Aussie, the Aussie minutes, the Aussie minutes just broke and kept going and didn't look back. But this bull bear trap thing seems to be a typical New York session thing. Nothing against New Yorkers or the city of New York, the beautiful state of New York. The New York session seems to be where we're getting this kind of fake out. So again, that was called the straddle, right? Now, ideally, how you could avoid the straddle is to like wait until you get a clear break above. See, now we have an established high here, right? 118.12, and you have an established low at 177.70, and so now you have a new range break. So if you're not in the market, then you would say, okay, this thing screwed people up like Greg. We're going to go either a break above the north side, 118.15 to the north side, or a break below 117.70 to the south side, right? Which usually in the news you get the break that would be like, it just very, very, very easy. Okay, you've got this really smooth move. Oh, map just lost my chart. Okay, yeah, and I can show you the Aussie. Yeah, see if I can find that Aussie. Yeah, the Aussie rate announcement. That was pretty smooth move. Is that it? No, I can't. Okay, I'm looking at. Trying to go through all my Okay, I'm not finding it. Oh, but what we can do is we can go. This is what we can do. We can go to all symbols. I mean, the move is actually on the. Yeah, look at that. It 1 hour That was like right here, right? And 11:30 was the announcement. Like 11, yeah, it was like somewhere here, and it was like it was like there, and there was this, they just dropped, it just rallied to a peak, and it just dropped, right? Well, 11, right? There's 11 right there. Yeah. So it rallied a little bit, and then it dropped. Okay. Anyway, let's get back to the action here, because it's starting to maybe pick up some steam there. Nope. Still hit the 618, and so now we have that was our trend line break, didn't hold, and then this is our right. So 8:15, and yeah, I'm not liking New York news. I like the Asia session. The Asia session was good. Now there's another news trade strategy that we used to use too, where you actually wait an hour after the news, right? So an hour after the news, what happens is you have like what we call a news fade reversal. News fade reversal. So if you go 1 hour, so that takes us to about 7. My clock here. 8:45. Go into the future. Way into the future. Yeah. Go to 8:45. And what happens is we get that a reversal where price returns right back to where it started and goes the opposite direction. And why? Because you have people that actually maybe took profit on this move, and now the buyers step back in. They close their positions by going the other direction, right? So that's the news fade reversal. But this one was pretty intense, where we we reversed on the same candle, right? Which can happen. And go to news, volatility. And I'm sure the Delta variant stuff and the recent crash did not, the dollar strength hasn't been helpful either, right? So here we go. So most volatile news reports we had retail sales, and that was up 80, but NFP is like 140, FOMC, basically your interest rate announcements, you get like around 60. So we're looking for about 60 here, and the average daily range of the euro, about 14 periods, it's about 52. So from that announcement, 85 to, we've only moved, the high we've moved to was 118.14, and the low was 117.71, right? So you've got a really tight range, about 43 pip range between the high and the low, which is a pretty tight move. We can also check. I'm going to check on the U.S. dollar and the stock markets too. The stock markets aren't open. The U.S. stock market is not open yet, but we can look at the pre-market, and then we can check how that's going on. Usually, the stock futures are mildly positive. We have the Dow futures up 28, S&P futures up 3.5, Nasdaq futures 16.75, and oil slightly up as well. So it's not tremendously bullish. Still bullish though. It's gonna, Dow's set to run the third day. Usually the U.S. dollar does not rally with the U.S. stock market. So if we have a good stock market, we should see the euro gain some ground and the dollar to weaken. But let's go ahead and take a look at the U.S. dollar index. I'm doing, usually if I'm in this long, something's not right in Denmark here, right? And it's, bumper sticker, I love New York. I'm gonna have one. I don't like New York session, not the city or the state, but the session. I love London session, but boy, it beats you up, guys. If you know what I'm talking about, if you're in the West Coast, or in Central Time or New York time, like 3 a.m., you get bags under your eyes, and but if you're in Hawaii, you are basically sitting, it's 9 o'clock to trade London, which is beautiful, However, right, 3 or 4 in the morning. But it's a time zone. Time in my favorite place on the planet. Time in Maui. Really? Time in Maui. Wow. Okay. Yeah, I just heard my my MT4 being okay. What is going on here? Okay. Alrighty then. And DXY. Okay. Okay, internet. Oh my goodness. What's going on here? Okay. Okay, hope I'm still on. Checking this Spectrum really has an issue here. All right, so here is the U.S. dollar index, and here is a let's go to a 5-minute of the U.S. dollar index, and you can see the dollar index has done the same thing as the euro, except in the opposite direction. It went up and down, right? And it has basically ranged out because the euro is considered the anti-dollar. And let me just check to see if we're still online, and we are. Really? Okay. Oh, I'm live. Oh, okay. Can you hear me, guys? Okay. Stop streaming. I don't know. I don't know if you can see me or not. Okay, lost connection. Exit.